major gold companies are responding to the increase in the gold price over the past while. Everybody's making money as long as you're producing gold. Now, we're at a point right now where we're making the transition from being an exploration company to being a development company. In other words, being a production company. And so over the past 2 years, we had expected to have our environmental permit approved in Mexico for building our open pit heap leach mine. But because of politics in Mexico, under the President Lopez Obrador over the past 6 years, the government has not been terrible to our miners in general, and especially open pit miners. So they started threatening about 2, maybe 3 years ago to potentially ban open pit mines. Now, Lopez Obrador has had 6 years to enact this ban, this proposed ban. It's never happened. As of next Tuesday, there's a new president takes over. Lopez Obrador will be gone, and we can breathe a sigh of relief because a new president is much more pragmatic, and we believe that the cabinet that the president is putting, surrounding herself with, are as pragmatic as she is, and we believe that we will get the environmental permit approval in a reasonable period of time. I can't tell you whether it's next week, next month, or will it take several months. But going forward, we are very, very strongly believe that we're on the cusp of making the transition from an exploration company to a production company, and the end result at that point the market will dictate through earnings per share what the share price of the company should be. So as it stands right now, we have forward-looking statements. We will be talking about the direction the company is going to be taking, and it always bears mentioning that there's a lot to cover here, so I won't do that, but I think you're all familiar with the forward-looking statements. We put together a team, in my opinion, that is one of the best exploration and development teams in all of Mexico. If you look at the top 4 people there, starting off with John Darch, who's here, our chairman. John's 40 years experience in resource companies around the world, all the way from the Philippines through Thailand, through Greenland, through Serbia, you name it. And he's a wealth of knowledge when it comes to raising capital for mining companies, especially. Jorge Diaz, our vice chairman, he's 50 years experience in designing and building and operating gold mines in Mexico. Started off with Peñolos way back in, like I said, 50 years ago, and which is operating independently. He's actually focusing all of his attention on Sonoro and has been for several years now. He's one of the founders of Sonoro from 2011, along with our other colleague, Melvin Herdrick, who's a geologist with over 5 million ounces of gold discovery to his credit over the years. So we've got a very, very fine team, including my own background is I've spent 40 years in the resource sector, in oil and gas, in renewable energy, especially geothermal energy, hydropower, and mining in the Congo, mining in Canada as well. So the entire team right now, collectively, we have almost 200 years of experience in running public companies and resource companies around the world. So as I mentioned at the onset, about to change. Claudia Scheinbaum will become the president as of next Tuesday, and she's coming out to reassure foreign investors that we have nothing to worry about investing in Mexico. Obviously, we as miners will hold her to her word, and we'll do our best to make sure that we will meet the environmental obligations that they obviously are looking for, because the standards in Mexico have recently, they've always been relatively high because we're using North American standards, beyond North American, but nevertheless, we will listen to what their concerns are. And their concerns really revolve around the quality of water in some of the states in Mexico. And it's not mining that's affecting the quality of water, it's overpopulation would be the likeliest in that regard. So The location of our project, our main project, the Cerro Caliche project, is the gold star you see on the screen here. It's called the Cerro Caliche project, and next to it, by about 30 kilometers, is the blue star, which is the San Marcial project. We'll focus today on Cerro Caliche, and we're surrounded by producing mines. The gold star, to go to the southeast of the gold star, and you've got the Bear Creek's Mercedes mine. Been operating for about 8 years, 9 years. It's an underground mine, and it's on the same structure as our Cerro Caliche project. And this essentially is a new area. Over the past 20 to 30 years is where this area has started to become really prolific as far as gold mining is concerned. Next to us, to our west, is the Cerro Caliche, or the Cerro Prieto gold mine, open pit heap leach. It's been operating for about 9 or 10 years. There's a very large operation in the making by Agnico Eagle, who are developing the Santa Gertrudis project, and we believe it's well over 2 million ounces at this point in time, and still building. One of the things about Sonora State is that it's reliant to a great extent on mining. 25% of the GDP is related to mining, so therefore any kind of proposed ban on future open pit mines, as the previous president had tried to enact, would be very, very severely felt in Sonora State, our economy. 25% of GDP. Zacatecas, another state, 33% of GDP. That's why I'm saying right now, I'm bent that there will not be a ban on open pit mining going forward. And the indications that we're getting back from the government of Sonora State, who are dealing with the federal government and are of the same political party, is that we will get our permit through. It's just a matter of patience. And so patience now should be rewarded with a new government coming in. So we produced it in October of 2020, at the time when gold was trading at around $1,800. So the base case that was used was $1,800. The worst case scenario was $1,600, and the upper case was $2,000. And what I want to emphasize here is at $1,800 gold, you're looking at a post-tax net present value of let's call it $48 million US, and an IRR post-tax of 45%. But you look at the jump when it goes to $2,000 gold. The net present value goes up by about $20 million, and the IRR goes up 18%. Now, obviously today, we're all looking at the price of gold at $2,600 plus dollars. And I cannot show you that on a chart simply because the securities regulations don't allow me to do that. But if you start, the net present value versus capex is 4.6 times the capex. And the capex is $15 million. Then at $2,000 gold, you've got almost 8 times the capex. So it stands to reason that if you start going to $2,200 gold, $2,400 and $2,600 gold, that line is going to continue essentially in a straight line because your costs remain the same, but the revenue increases dramatically. So I'm happy to say that at this point in time that if we were getting into production today, we'd have payback in about 1 year. So it's a very robust project, even at $1,800 gold. And the Red Cloud Securities in Toronto put together this slide to show how we compare with our peers in the development phase in various parts of the world, mainly Australia and the US and Canada. And of the ounces in the ground right now, essentially, are $27.58. As we go forward, as we get the environmental approval, you will see a big jump in the value of the ounces in the ground. And a good example would be the one PPS Mining on the right. They're more advanced than we are with developing their gold resource. And in Mexico, we compare very favorably with other gold projects that are operating in Mexico and some of them are waiting for environmental approval as well. But once you get to the point where environmental approval has been granted and we're going towards production, you will see the value per ounce increasing dramatically, way beyond $27. And I'll can assure you it would be multiples of $27. So the project as it stands today is 1,400 hectare of highly productive and highly mineralized land. We spent 55,000 meters of drilling has been done over the past 5 years. And we've developed a resource which is almost $700,000. I combined the 440,000 ounces within the pit shells that SRK have defined and our engineers have defined, along with almost 300,000 ounces surrounding the pit shells but have not been classified yet. So when you tally it up, the mineralization is almost $700,000 plus. Now, I want to emphasize we've only drilled and assayed less than 30% of the known mineralized zones in the property to date. As you can see, surrounding the areas, you see the red squiggles. These are all vein structures that have been exposed at surface and sampled and are mineralized. So 70% of the project still to be drilled, and we know it's mineralized. So the forecast is this is a 2 million ounce resource. So the plan was at the earliest date to start generating revenue and then use that revenue to keep on drilling to realize the full value of the project. We have very high-grade areas, and while we're waiting for the permits right now, we have planned for underground mining, but I believe very strongly that in the next few months we'll get the permit to complete the open pit mine. Showing these to show the ease of mining. This one here is showing the next phase of drilling that we continue to expand the high-grade zones in the west, and you see Guadalupe and Colorado, Buena Suerte and Cabeza Blanca. These are all high grades. Currently, the PEA is designed for 9-year life of mine, producing 33,000 ounces a year. 33,000 ounces a year will then be superseded as we continue with the drilling program. We anticipate that with the expansion would result in 3 to 4 times greater production over the coming 5 or 6 years. So if we were to achieve the permit from the federal government today to build the mine, we would be pouring the first doré bar in less than 12 months. It's that fast. It's not a labor-intensive or not a very construction-intensive process to build an open pit mine. And we've done it so many times with our team in Mexico. Summarized on the share structure here, we have 200 million shares approximately issued and outstanding, of which we as insiders control 27% approximately. So every time we've done a financing, we have contributed as much as 30% of that financing. So it shows the commitment that the insiders have to the well-being of the company. And whenever the company, because of the poor markets over the past couple of years, whenever we had major, we would contribute as directors and loan the company the money with no specific terms of repayment. We will eventually get repaid out of project finance or out of cash flow. So on that basis, what I'd like to do at this point in time, Carlos, is if there's any questions that anybody would like to propose?
Yes, and it seems like the new president here is much more positive towards mining. So worst case would be the same situation as we have now, I take it. Now I'm going to go out on a limb here at your NPV of the project. So if gold net present value was 4.6 times capex.
Yeah, okay.
Yeah. And then at 2000, it was 8 times capex.
Yes, yeah.
And now we're at 2,600. Would that be 32 times capex?
I think we have some math geniuses out here at CC2. I'm compelled by the Securities Commission to not opine upon that.
Okay.
But you can surmise that when you go up in a straight line with the increase in value, you're in the ballpark.
Okay. Yes. So I wasn't out on a limb, although security-wise I may have been out.
You can do your own speculation on that. I can't.
Yeah. If we look at the jurisdiction, that's a non-issue. issue. What about, let's say, physical?
That's always, it is Mexico after all, and there are areas in Mexico that are essentially no-go zones. We're not in one of them.
No.
The area that we're in, where the mines are situated, is relatively peaceful. In fact, very peaceful from my understanding. We've never had an issue. We've never had any areas of concern. And so the other companies are operating quite normally, and they're able to export their gold to the United States, so I don't see any issues there.
So there's no issue there. There shouldn't really be an issue when it comes to, let's say, jurisdictions, and we have a fantastic leverage on the value of the net present value. You mentioned that revenue, you will use the revenue to keep on drilling, and then you show the shareholder structure. So what do you need to get where you want to be, let's say in the next year, and you have been granted the permit?
Okay, the capital cost for building the mine is $15 million US. Now, there are ways and means of achieving that without dilution to the shareholders. And a perfect example is forward selling some of the gold. And we have been approached by numerous parties who are willing and able to forward sell the gold and thereby provide us with the capital to build the mine. And of course, it gets repaid out of cash flow.
And if we look at the neighbors and the neighboring mining companies in your area, they are bigger than you?
Oh, yes, they are, because they're in production. And of course, the big elephant in the area would be Agnico Eagle. Now, they haven't started mining in this area yet, but in due course they will.
So they have the assets, and they obviously have the capability of calculating the increase of the net present value increase.
They have that ability.
So are you as a whole or parts for sale here?
Well, if a credible offer were made to acquire part or all of the company, of course we as directors are obligated to review and, if necessary, recommend it to the shareholders. But yes, we would do that. Obviously, the end result would be that yes, we want to go into production because that'll add so much more value to the company and the project by going into production. If at that point it becomes a target for a takeover, we'd be perfectly happy to do so.
And what would be the next news line from you? Would it be permit, or is there anything else that we're waiting for in the near term here? The
near term would be the permit. There's no doubt about it. The catalyst for growth in the share price and, of course, in the operations would be to get the environmental permit approval. And after that, once we have the permit, we secure the project financing, and then also along with the construction, we would continue with the drilling program, because part of construction finance would involve additional drilling in order to keep quantifying a larger resource and a higher grade of the resource as well. So we would have lots of news over the coming year to do that. And by the time, for example, I'm mentioning that 12 months is what we need to, from the time we secure the environmental approval until we pour the first doré bar. Well, our team has already done it in another project in 5 months. So I think 12 months is conservative.
Okay, interesting. Well, Kenneth, an absolute pleasure.
Thank you very much. Thank you very much, folks, for joining us today.